on GJ here. So right now we are currently bearish, I'll say. Right, if you guys take a look at price here, we are currently bearish. There's a resistance formed here. There's some type of support formed down here as well. This is the range that you are in right now. I do believe that if this is the range you're in, that price will continue to, well, there's no top wick on the previous monthly, right? So I would expect this candle to come down to fill the wick. I think you did come down, you filled 3/4 of the wick, and now price is starting to flip bullish again. So I don't know if you have enough time, unless FOMC tomorrow really pushes price, but if you really have enough time to really come out, create a top wick, and then close bearish below range for the rest of the month, because you need a lot of volume, right? For that to happen, you need one to come up to 2,000 again to create a top wick, and then you need a flip bearish, which is at 2035, 2040, and then you got to come down and fill the range, which is 1880. So unless like FOMC is very volatile tomorrow, I don't really see that happening. If it does, hey, I would not complain, right? But yeah, if we can close bearish outside the range this month, perfect. Next month we should continue to push further down, or even bullish, right? If you close bullish above the range, that's fine as well, because next month, again, if that were to happen, then we'll continue to drive up next month. But again, this is just the monthly outlook. It's irrelevant to our like smaller time frame analysis here. It's just what I'm picturing a higher time frame. So it might not be useful today, but as you know, the new month starts, or the new month's about to end, you can kind of have a picture and idea of where price could close, and you can use that to your advantage. So that's how I kind of see it. Going up to the weekly time frame on gold here has no bottom wick, right? So obviously, if you guys take a look here, you're gonna notice that we are currently in this range here. So there's a range right here from what is this, 1960 down towards here. This is the range you're in, right? So if this is the range you're in, there's a high probability that you're gonna come down to fill the range. Now the issue is we closed bullish. Well, it's not really an issue. This is what happened, right? We closed bullish. And if you guys zoom in closely, I'll say you close bullish respecting this resistance. I had a resistance marked up here off of these levels to the left here, right? And I'll say for the most part, you close respecting. Last time price closed above, I guess actually even here, like it closed above, it didn't drive up. So if anything, like this is just one range, honestly. This is just your overall range. So if this is what's happening here, right? Monthly has no top wick. Weekly, yeah, 3 days left into the weekly. You're coming up right now, you have no bottom wick. There's a high chance any given point this week you could flip bearish, right? And as you flip bearish, this is what's like going to happen. You'll flip bearish and you may end up filling the range, or you may end up closing bearish overall after filling the range. But this is what I would be expecting if you were to continue driving down. You'll be coming up, creating a top wick, and then obviously since you have no bottom wick, you'll be flipping bearish. And as you flip bearish, price has a decision to either close bearish or either drive through once it actually flips bearish, right? It doesn't really help that you also close like a minor, there's like a minor support here as well. So if anything, worst case, you might just come down, create a bottom wick. But even that still, like that gives you like a range of what on a weekly, like a 220 pip range. Because like even if you don't drive down towards the bottom, the range of 1880, you're at least going to come down towards the flip, which is alone 150 pips, and then tapping the support, which is 240 pips, right? That's like a $20 move on gold, $24 move on gold. So that could possibly happen at any given point this week. Right, so obviously we're pushing up right now, we're making highs, dropping down to the daily candle closed bullish yesterday, but again, there's no liquidity. I would have expected liquidity for us to drive up. Right now, understand today you close above the most recent resistance, so you know what, any given point, yes, you could continue to drive up. That's kind of what happened up here to the left here, right? And that's what happened kind of here as well. That can also happen here. But the problem is with this is that if you look to the left, these poles here all had liquidity at some given point. Y'all grab liquidity. Like you see this? There was liquidity being grabbed here in these ranges. And that was what I was expecting. I was expecting for the week. I was expecting to tap 1913, 1910 before making your way up towards 1970. Because that's your next resistance, right? Realistically, looking left, you look at this pole here to the left, right? You look at this pole. Hold on, my bad. You look at that pole, you look at this pole up, right? You're going to see that you kind of tapped into these ranges. So I'll say for the most part, your average resistance is going to be somewhere around here, right? So if that's what you're looking at here, for you to really drive towards 2050 or 1950, I would assume you'll come down and grab liquidity first, because that's kind of what happened here. And that's kind of what happened here, right? And that hasn't happened here. So I was expecting that last week to at least, if not here, at least come down to create a bottom wick at the most recent wick. So like that'll be around here. Right, if that were to happen for the weekly, perfect, or for the daily, perfect. We can come back up to retest the high. So I'm trying to see if we can take advantage of the selves to come down before taking the buys back up, if that makes sense, right? Because if you're expecting a bottom wick and the bottom wick area is going to be anywhere between, you know, 1920, 1924, you can take advantage of the sells coming down before taking the buys back up, right? So that's what I'm trying to see here. I understand we close above the range, and I understand that there is a minor wick on a current candle high low, so any given point can easily just rip up. I get that, but then again, there's also a resistance off rip here, and if you have no bottom wick, you may just tap that resistance and start to reject. So 1943 here is a pretty key level. Let's mark that up. 1943, where is that? 43 over here, and then you have like your current, like I guess like your most recent support here, 26. So like 43, 26 higher tapping key levels. Let's see where or how that will look on a smaller time frame. Let's see what happens at 1943 and 1926 on a smaller time frame, because we can start to look for positions in those areas there for buys and sells. Now, overall, I think the forward candle is bullish. However, I'll say for the most part, you close bullish respecting this resistance here. Now, I'm not too sure how major this resistance is, but I'm assuming that it's pretty decent here, because you have this rejection here to the left, right? You have this right here. You have this support being formed. Those candles never closed below. These candles did close below, but they never ran. So worst case, you can even move your support down here, but I'd rather just have it at the most reason because it makes the most sense. Let's see, or even here, to be honest, like you can continue to drive out towards 1938 and continue to fill those ranges. Like, don't get me wrong, that could definitely happen. I guess that might make more sense actually. Yeah, putting a resistance up here at 1939, 1938, because I believe you may continue to drive up here, tap into those ranges there. So if that's the 4-hour time frame, and that's your next resistance, because this is your resistance, right? But like, it can tap 38 and still flip bearish, because the 4-hour candle is still bearish or still bullish below the range, right? This candle right here never close above. These candles never close above, right? So therefore, any given point, what can happen is you can literally just come up, tap resistance, tap 39, and continue to flip after tapping 1939 or 1940. That could possibly happen. So I think the level we had yesterday was 35, but today I think it's gonna be 30. It's gonna be 39.40 here. So I believe once you tap 1940, I'll start looking for sells to continue back down, because this 4-hour candle has about an hour left and it hasn't really closed above. So any given point can tap 39.40 and still flip bearish, and that might give you the pull down towards 1928 for that daily bottom wick, right? Going back to the daily, you need a bottom wick to continue driving up. It's around 22, it's around 25. So even if you don't come down or come back up, you got to create a bottom wick first anyways, right? So that's the 4-hour time frame. That's what I'll be looking for. Anywhere between 39 and 41 are going to be my areas that I'll take sells at, potentially on price here. But yeah, man, that is what I got going on here on the 4-hour time frame. So let's drop down to the smaller time frame. Let's go back to those levels. Same shit. The 1-hour candle here closed bullish, respecting resistance. The last 3 candles have all closed respecting. This one respected, this one respected, this one also respected. This one, again, it's open right now, right? But at one point, this candle right here also looked the exact same. It was bullish. Then what happened? Closed doji. Same thing can happen here by the end of the 1-hour candle with the 4 candle closing as well, right? So it's looking good. And also 30, 15, 1, like these things don't have liquidity to drive up. I would assume that even if you were to drive up, you'll see at least this form first. You'll see a bottom wick on like the 33 levels, 34 levels, right? Before making our way up. Sure, once you break those lows, great. You can look to continue up towards like the next resistance, which is like 1960 or whatever it was, right? I think it was 1945 and such, right? So yeah, I am bullish today, but I believe before driving up bullish, you need to tap certain levels. So I'm looking to see if I can take advantage of those areas there. So dropping down to a smaller time frame, you have the 1531. At this point, I'm picking the time frame that looks the cleanest. So there's no news today. So we can use any time frame really. I'll say I'll use the 30 in this case. 3015 is looking pretty good. So 30-minute time from here. What was it? It was around here, right? 1939. So there's your resistance on price there, right? So if you were to come up, you should be able to break those highs, 1939 here, or you should continue to drive towards 1939. And I believe sell areas should be anywhere between, I'll say, might be around here actually. Let's see, what is this? 39.8. Yeah, 1939.838 will be the sell areas, I'll say. So once you tap 39.838, that'll be where I'll be looking for sells positions at. right? Let me see. Yeah, right there. So let me go ahead and just draw this line here. 838. So delete this. 30. Cool. Perfect. So if I'm looking for sells, I'll wait for price to tap 1939 first, because I do believe that if you were to continue driving down today, you need liquidity to drive up. So it's kind of like saying you need liquidity to drive up, to drive back down, to grab liquidity to drive up overall. Does that make sense? Because it's like shifting time frames, right? Like let's say you're driving a car, you're shifting gears, right? As you shift gears, there's different what do you call it? There's a different spin to it, right? To the torque, whatever shit is called. So like let's say like you're looking at the for instance the daily in 4. Daily in 4 shows that we're bullish, right? So you should continue to drive up towards like 1939, 1940, right? But before driving up towards those levels, 45 and such, you need to grab liquidity going up, right? So you drop down to a smaller time frame. If you were to continue driving up, you need to grab liquidity in a higher time frame. So therefore, on a smaller time frame, you need to grab liquidity up to drive back down, so that will be liquidity to drive up later on. Does that make sense? So like you're kind of like just shifting the gears, right? So like you might like I'm bullish today, don't get me wrong, right, on a daily, but again, you need to grab liquidity before driving up. And I believe if you're grab liquidity driving up, it's going to be around 1924. It's going to be around 1922, 24. And for you to come all the way down towards 22 and 24, you need liquidity up, right? So therefore, if this is your resistance on the 1 hour time frame at 1935 here, high chance you can rip up towards 39, tap those ranges, any given point, flip bearish, and there's your pull right there. There's your sniper entry for you to drop back down towards like 1924 or 1922, and that'll be the daily bottom wick that you have. All right, so that's the analysis. That's what I'll be looking for today. And yeah, 39, 8 to 8 is gonna be the sell levels, I'll say. So let me go ahead and just put this here. And also, any given point you can rip past 39, and if structure changes, like if you make your way up towards 39, you create lower lows. Like if you were to create this at any given point, you can't really take sells at 39 because it's gonna rip past 39. So therefore, you can probably take buys, right? So I can take buys today. Probably, I'll say, I want to see structure form first. So I don't want to mark up any buy levels yet. But just understand that we are technically bullish today. So any given point, we could just rip a buy. We can just take a buy going back up to fill the ranges. It's just that you need levels to get tapped first. So if anything, my buy zones are gonna be around like 1936, 1938, 39ish. But yeah, like just because I have sells here doesn't mean I'm not open to buys, or it doesn't mean we can't take buys as well. We can take buys or sells today. It doesn't matter. It comes down to you understanding what game you're playing today. Are you playing the range? Are you playing the continuation? Are you playing the pullback? Right? Understand your game and play inside your game. Don't try to mix games because it's not going to work out well, right? You can't be taking a pullback and expecting a swing. It's not going to go great, right? It just doesn't make any sense. So if you're taking a pullback, understand that's a pullback. Maybe be a bit more aggressive with stops to break even, right? But you have to understand your edges today. Understand what you could play in the markets, right? But yeah, that's what I got going on, chat. So let's see what could possibly form for us today. All right, that's the analysis. Any questions? If somebody asks me to buy or sell,